Hello and welcome to Investing Confidential. Well, the Fed did it. I didn't think they were going to do it, but they did it. 25 basis points. Powell's going to speak in a little bit. I suspect he's going to be fairly hawkish. I think this is the last rate cut we're going to have. As you can see, these characters on CNBC are jumping up and down because the market just keeps powering on. I mean, there's no stopping it. The S&P index as itself just keeps going up. A lot of stocks are being left behind, but that's normal. We know that Mag 7 is really Mag 5 now. Obviously, Tesla's caught up. Maybe it's Mag 6. Who the hell? It doesn't really matter. This is the worst breath in the history of markets anywhere in the world. I've never seen this. I've never seen anything like this. And it will continue till it doesn't. So, but I think that the election on Tuesday continues to be an inflection point for financial assets. Wall Street versus Main Street. I'll keep telling you guys the same thing. Wall Street's days are numbered. The economy of Main Street is going to have a mean reversion. Not going to be good for the market, but most people in Main Street don't have many stocks anyway. So that shouldn't be much of an issue. So again, this is going to be a short one, but if you're invested, stay invested. If you're looking to buy, stay away. In terms of financial assets, if you're a real estate investor, I'd be looking for opportunities down the road. There's no opportunities today, especially in family, single family for sure. It's the most overvalued in history. So we've got the most overvalued stock market in history, most overvalued real estate market in history. This doesn't last. Okay, I saw this in Japan in the late 80s. It just doesn't last. Okay, it's happened numerous times. You've got the largest economy in Europe. Germany is in recession, crushed. China is barely getting out of a recession. They're just floating along. Japan is doing okay, but not great. I mean, it's amazing. I mean, the U.S. is operating literally in a bubble by itself. The rest of the world is in a mild recession to deep recession. Mexico, Brazil, I mean, these countries aren't growing, and it's shocking. The U.S. consumer piles on tons of debt, and which is piling on the economy. Tax decreases, which the Trump administration is going to do, are not going to help because remember, 70% of this GDP is consumer. Okay, consumer. And so cutting taxes isn't going to help cutting taxes for companies is not going to help the consumer. I mean, if you're going to tell me these companies start hiring tons of people, great, but they've had low taxes for a lot of years, and all we're seeing is layoffs. Are we going to see a change in the temporary? I call it the temporary job. The job numbers they're inaccurate. Okay, employment continues to go down. Job numbers continue to go down. This is temporary employment. It didn't matter who was elected. Doesn't matter who's elected. This was going to happen, and neither one of these people, including Trump's, going to address the deficit. And people say, "Oh, your hair's on fire by the deficit." Go right ahead. Tell me all that. Tell me all that. Tell somebody right now in Florida who's 6 months ago was jumping up and down in Zillow, "Hey, look, my house is worth double what it was 3 years ago." How about now? How about now? Everyone's trying to get out of Florida. They have the highest inventory, I think, ever in the history of Florida. Go look at it. Sold to you, unfortunately. Some of these people have had really bad situations. It's horrible. But it's not uncommon. We're seeing this scenario all over the United States, with the exception of the media centers, especially New York. Insanity reigns in New York. So no one knows, except if you live in Texas, you live in the Carolinas, you live in the Midwest, you live in the South. The housing market isn't strong. There's nothing for sale, but anything that does for sale, it sits there and goes lower and lower and lower. People cutting prices, cutting prices, cutting prices. The SP 500 is the only thing in the world that's powerful, and that's 7 companies. So how really strong is it? How healthy is that? And then you got the pundits here behind me or next to me, whatever, just think this is great. Wall Street thinks this is great. How great is it for Wall Street? They're at 27-year lows in IPOs. They're doing M&A, but is it great? No. They had record earnings, the banks, because of the float. They continue to make tons of money on the float. If you don't invest your money, if you stick it in a bank, you're still getting barely 50 basis points. That's the reality. Ask your bank. They're making all their money in the float and they hide it, saying, "Oh, we have this, we have that." Sure, they've done some M&A, whatever, but there's no capital markets. There's no IPOs. There's no corporate bonds being sold. So how strong is the economy? Well, the leading indicator, right? The S&P hasn't been leading in it for years. We'll see. Things go up till they don't. And when they don't, they go down real fast. You will not have time to sell. You will not have time to sell. Am I telling you to sell? Absolutely not. I'd be a fool to tell you to sell the S&P 500. But watch the dollar. That's the only thing you have to do. The dollar was heading lower, and then the election happened on Tuesday. Trump won. The dollar had a massive strength. Why? Because interest rates went up. The Fed just cut rates while interest rates going higher, anticipating growth. This is how insane this is. Nothing makes sense. In the history of Fed cuts, nothing makes sense. The Fed continues to make errors, policy errors. The only thing that's hiding inflation is the price of oil, which most likely will go lower over time until it doesn't, right? Because we're gonna overproduce. But you think Saudi's gonna sit back or we overproduce and let oil go to 50? I don't know. It may. They may cut a deal. I don't know. So celebrate. The Fed's cutting. Hey, keep S&P higher, Dow indexes higher, higher, higher. If you own individual stocks, they ain't going up. They ain't going up. But I'll tell you what is going to go up over time, what the better trade is. Again, long term. You people don't, no one looks long term. I mean, you guys, but nobody looks long term. They look at what happened today, what's happening tomorrow, and that's it. But over time, you're going to make your money outside the US. You're going to make your money in commodities. You're going to make your money in emerging markets. That's where you're going to make a lot of money. Much more money than you're making today in the S&P, believe it or not. When EM goes up, it goes up big, violently. And it's broad-based, right? Unlike the US where 7 stocks, when EM goes up, everyone rides the wave. Everything goes up on the wave. The smaller the companies actually go up even more than the bigger companies, unlike the US. So you see NBC pounding the drums like they should, right? Fed, again, the Fed is not there to worry about inflation, even though they say they are. Not worried about what the Fed is worried about is the S&P 500, the indexes, the bond market. They can't help the bond market. The bond market is much smarter than the Fed. But sure as hell, they can help the stock market, and they're going to continue to juice the stock market. Powell wants to be kept on, so he's going to keep juicing it. Because I don't see anyone with any kind of understanding of history and of financial history. Understand this is insanity. Cutting rates in the midst of 4% unemployment, and you're supposed to be looking at all these numbers, 2.5% GDP, if that's believable. 2.5% inflation, that's believable. That's what the numbers say. And for the last 60, 70 years, no Fed has ever cut rates with those type of numbers. That's fact. So Do what you want. Keep holding. Okay, I would keep holding. I'm holding, but I'm going to get out real fast because when it goes, it's going to go. When the technicals break down, because that's really all that matters now. We're in a bubble market. Follow the technicals. Look at the moving averages, the 50-day, the 100-day, the 200-day. When this thing starts to break the uptrend on the 50-day, start taking money off the table. When it breaks the 100-day, take more. If it does break the 200-day, it's over. But the technicals are now the only thing that matters because the S&P we've entered the bubble phase, right? The ultimate bubble phase. How long will it last? Nobody knows. Nobody knows. Mutual funds close up their year at the end of November. Something to watch. But I still say Tuesday was the inflection point of something. The beginning of the mean reversion of Wall Street versus Main Street. So if you're watching these characters on CNBC and you're waiting for the Fed and you're going to make some decisions, as always, be careful out there.